to celebrate the new year, we have a list of callers who tell us that this is the first time they're investing in shares. So in some sense, maybe the new year would bring in more people into the financial markets and teach them the basics of intelligent investing. We've got our experts with us. Gaurang Shah of Geojit BNB Financial Services is answering all our stock queries, and Kalpesh Usher of Full Circle Planners and Advisors is our personal finance expert. Gaurang, Kalpesh, a very happy new year to both of you as well.
Happy new year to all of you. Thank you, Lata.
Thank you. Well, just a word on the markets. As I was pointing out, it's an apology for volumes. I don't know, 60,000 crores with half the day done. I don't know when we last had it. Probably when the index was at 5,000. So then the total volume looks smaller. But when the index crossing 8,000, I don't think we have ever had volumes as tepid as this. Clearly, the cat are away. So mice at play, and that's keeping some of the indices well ticked. Among the indices that are doing well today are actually the bank stocks, especially the smaller banking stocks, with one newspaper saying that Andhra Bank probably is a consolidation candidate, despite both PNB and Andhra Bank denying it. Smaller banks are the flavor of the moment.
I think even Bank of Baroda denied it earlier today.
Okay. That makes all the denials in. But United Bank, Dena Bank, Andhra Bank, which are always seen as candidates for takeover, either because they're too weak or too small or too regional, are up and about in hopes that there will be some consolidation afoot. But it's really just news like this that's keeping the mid-caps abuzz.
All right, so let's get started then and welcome our first caller on the show. Sharmila calls in from Bangalore. Hi, Sharmila.
Hi, a very happy new year to you.
Hi to you as well. Tell us, what's your question?
Actually, being the first day in the new year, so I thought if I could get some suggestions from you on long-term investments in banking stocks.
Okay, any particular reason you've chosen the banking space, and have you never invested in equity before this?
No, I'm a new investor.
Okay.
And I would like to invest in, say, SBI or ICICI.
Okay.
Shamila, do you have any mutual fund investments? Or do you have no shares at all, either as mutual funds or as shares?
I don't have any shares. That's why I need your help.
Okay, so I guess we should toss it over to Gaurang then. Gaurang, we have a person with an absolutely brand new clean slate, wants to start off with what's considered to be the proxy on the economy. What would be the best bets in the banking space?
Well, thank you, Sumara, for that. And first of all, let me wish the viewers of CNBC TV 18, yourself, Lata, and the entire team at CNBC TV 18 a very happy, healthy, and a prosperous new year. And it's glad to see the inclusions in terms of investors coming through and new investors stepping in. Well, this lady has a capital of about 5 lakhs of rupees. I would advise that don't invest the entire sum in one particular sector, that is banking. Break it into two parts, that is 2.5 lakhs, 2.5 lakhs. Her choice is State Bank of India and ICICI Bank. Well, both are the largest player in their respective category. One from the public sector bank, State Bank of India, and the other from a private sector, ICICI Bank. As a disclosure, we do have a positive coverage on both these. So put your 2.5 lakhs to work in the banking pack. You can choose both of them, State Bank of India and ICICI Bank, and the other half, that is the other 2.5 lakhs. My advice would be to look at IT or pharma, and in IT you can look at right from the big boys, TCS, Infosys, HCL Tech to Tech Mahindra. You can pick over here. And the other one would be personal system in the IT pack. So I guess you need to divide your 5 lakhs into two parts, one in banking and one in IT.
Gaurang, would you want to ask her to persist with stock-wise investing, or since she doesn't have mutual funds or any other mode of investments, would that be a safer way to start?
Well, I think it is always prudent, Lata, to classify your investment into different asset classes. Thereby, you do not have that risk of exposing your entire capital to one particular asset class. So yes, I think put 2.5 lakhs in equity and maybe 2.5 lakhs in mutual fund indirect equity.
Okay. Any thing you want to add, Kalpesh, in terms of how she can approach her interest in getting into stock markets for the first time?
Yeah, surely, like Gaurang also said, that she should divide her investments into various assets. And if she wants an exposure into equity, she could look at partly allocating to direct equity and also partly allocating to mutual funds. Because as we all know, equities is a very turbulent ride. And it's a long journey. So probably what equity mutual funds would do is let you take that entire turbulent journey, but with the seat belts on. So I think that's for the lady.
Any specific mutual funds you want to tell her?
Surely, she could start looking at large cap funds and not limit herself to the sectoral allocation which she's already taking through the shares in banks. So she should look at large cap mutual funds. Probably index fund also would not be a bad bet to start off with.
She will want names.
Okay, then to start off with, probably the Reliance Index Fund, the Nifty plan is not a bad bet. And the ICICI Prudential Focus Blue Chip Equity Fund. So she could start looking at those things to get into equity.
All right. Shabira, that's a lot of ideas for you. If you're a first-time investor, mutual fund route would be a good idea. And there are some mutual funds that our guests have mentioned. All right, okay. Let's welcome our next caller. Maua Datta is calling us from Kolkata and she wants to know about the railway sector. Go ahead, Maua, your question.
Firstly, Happy New Year to all of you.
Thank you very much, Maua.
And what I want to ask is, now, see, these days government is going all out about the railway sector. So do you suggest, or I can start investing in railway space, or you can please suggest some stocks?
Okay. Are you a habitual investor? You have enough share and mutual fund investments?
No. But I do want to, and I want to take your help.
It's the first time you're investing in shares?
Yes.
All right. Gaurang, again, we have chosen new investors for the occasion of the new year. What would you tell her?
Well, since she is new to the market, investing in railway stocks, Lata, I would not advise. And you've always seen, of course, this time around you have a new railway minister who's got great experience and insight and wants to take the Indian railways to, wants to raise the bar. But I think this is still work in progress, even though you have got in principle approval for FDI and railways in some particular sectors, not the hardcore ones which are actually operational wise. So I would say that instead of railway, I would advise her to look at pharma. And over there, as a disclosure, Lata, I would advise to invest in Sun Pharma. We have a positive coverage. 950 is the target that we have set aside from a 1 year plus time horizon.
All right. So, Maua, that's the advice. Rail stocks, we have just a handful of them and perhaps may not be the biggest beneficiaries of the developments in railways. And since you are a new investor, the advice is to go for what you call defensive pharmaceuticals. Even if the business cycle is up or down, you have to buy medicines. So Sun Pharma, a well-run company which has given great returns over the past 3 years, is Gaurang's advice for you.
All right, we have another caller on the line with us now. Vipul Thakkar calls in from Gujarat. Hi, Vipul.
Hi, wish you Happy Diwali, Happy New Year for all the investors.
Thank you so much, Vipul, and we hope you have a great year too. Go ahead.
My question is that since in 2014 equity has given very good return, whether it will be prudent to go for equity asset class, or we can switch over to some other asset class like mutual fund, insurance, or commodities, or other asset class.
Okay, so you're looking to invest, am I correct? This is for wealth creation.
I am a new investor and I want to know whether this return can be replicated in equity again in this year also, or we can go for some other asset class.
Okay, got it. So first, before I toss it to the expert, just one piece of information that I've collected from the many experts I've spoken to. Insurance should never be considered as an investment. Use that only as a risk cover. So that you can delete right away if your objective is wealth creation. For the rest, which asset class, Kalpesh, should a retail investor bet on in 2015?
Okay, first of all, Vipul, welcome to the world of investments. And what I would suggest is that, we all have seen that equities have given a fantastic return in the last year, probably to the tune of 30%. But even the scenario, although it looks good in the next 3 to 5 years, 2015 might not be able to replicate the returns which we are looking at for the long term, or we've seen already. So I would suggest that if you want to take a small, dip into the equity world, do it in this year, because probably you might find good valuations to enter the equity market when it's not on the up move completely. But prior to that, like rightly what Sumira said, do not consider insurance as an investment option. That is surely for your protection and not for your growth. As far as commodities goes, again, that's a strict no, because you're a first-time investor and you do not want to burn your hands right away in a thing which you do not know or understand. Identify your goals, Vipul, first. Because once you have your goals in place, that automatically puts the focus on where you are headed and also determines the asset class which you want to get into. So if you have a goal in your life right now which is just 3 years away, equities is not the answer. But anything above 3 to 5 years, equity mutual funds, like I just replied to the previous caller, lets you take a good look at the equity markets, but with a lot of caution, and you're not putting everything into it at one go. So you should surely look at equity-based mutual funds, and in that also probably tread in it with a little bit of caution, but do it for sure.
Okay. Joining us now is Nirmal, and he's calling us from Bangalore. He has a personal finance question. Go ahead, Nirmal.
I've just turned 30, and I was wondering if you could suggest some kind of health insurance option.
All right. I guess our expert here, Kalpesh, will have more questions for you. Kalpesh?
Nirmal, first of all, I think if you have not made any New Year resolution, please make this as one. And go and get a health insurance policy, and I would add to it, even if you've not asked, is get yourself a term plan, a pure life cover if you've not already got one. What happens, Nirmal, is...
I do have LIC coverage, but then I've not done anything on the health insurance part because I keep hearing something about the star health insurance and things like that.
Yeah, but in the LIC part, you need to tell me whether it's you've got an endowment plan or you've got a term plan in that, because there's a difference in both.
It's an endowment plan.
Yeah, so that's exactly what I'm trying to say, that an endowment plan is again an insurance cum investment type of a product, which neither lets you get the best of both worlds. So it neither lets you get the returns which you would probably seek, or gets you a very substantial life cover which you would require. So get yourself a good term plan. I'll come to that. Starting off with your first query of a health insurance which you require. First of all, get a health insurance of approximately 5 lakh rupees, because in today's world which we're living in, the spiraling costs of medical expenses can turn a family budget upside down if you're not covered well. So do that on priority. Even to the extent, I would say, if your budget permits, get your family members adequately insured. Because in case of an eventuality happening, you are not prepared and you could be in a tailspin and everything goes haywire. While filling up the health insurance application, 3-4 things which you need to note is, please be very candid and true when you're giving your details, your health details, your personal details to your agent or a distributor who's doing the insurance for you. Because we do not want a situation where an eventuality, if it were to arise, and insurance depends on the basis of good faith, and your claim is rejected. So do those things first. Get yourself a health insurance. Okay. Now turning to the point of a term plan, this is a cushion which your family members would require, Nirmal, and surely a term plan would stand you in great stead. I do not know the exact profile which you have, but I could simply say that 10 to 12 times your annual income which you're earning right now from your source should be your term cover. Now what could this mean is that, say unfortunately a time comes when you're not there, this would help your family in times of those needs and let them lead a financially cushioned life.
Calling us now is Raj Brahma. He's calling us from New Delhi. He has a question on sanitary ware stocks. Go ahead, Raj.
All right, hi and Happy New Year to everyone out there.
Thank you, and same to you, Raj.
Thank you. Now, keeping in mind this Swachh Bharat campaign which has been launched recently by the PM, I was thinking that there should be a spurt in demand for everything to do with, with cleanliness and, that kind of, so sanitary ware, would that be a good option to invest in?
Okay.
This point of time?
I guess, Gaurang, up your alley?
There is a lot of anticipation, Lata, on Swachh Bharat campaign that the Prime Minister Narendra Modi has initiated. But here the problem is that first of all there are a lot of players both from the listed arena as well as unlisted entities. Secondly, we don't know now who will get how much, when and in what form. Since there are a number of players, and whether it is going to be coming through the listed entity or the unlisted entity route. So betting prematurely on this particular Swachh Bharat campaign and wanting to invest in sanitary ware stocks, I don't think it's really a great idea. But if you have to, if you are compulsive enough and you want to choose something, then I think Kajaria Ceramics is there, and if I'm not mistaken, there is one more, HSIL, that was earlier known as Hindustan Sanitary Ware. That's the two stock that you can possibly pick.
All right, so that's the advice for our caller, Raj. Two stocks you can look at is Kajaria Ceramics and HSIL. Finally, we have our last caller on the line with us. Amit Sethi calls in from Pune. Hi, Amit.
Hi.
Hi, how can we help you? Happy New Year to you as well. How can we help you?
Okay, my salary is 30,000 per month.
Okay.
I have not invested in anything. I want to start with SIP. How much do I start with and how do I go about it?
Okay, how much you start with will, I guess, also be a factor of what kind of expenses you have per month. So if you could give us a rough indication of how much surplus funds you're left with each month?
Around 4,000 to 5,000.
Okay.
And can expand more than that.
Okay, definitely. Kalpesh, what's the advice? What are the good funds?
Yeah, now, Amit, being a first-timer and the amount which you can spare right now for investing, what I would suggest is that actually it fits into the bill that you should allocate around 20% of your monthly income towards investments, and that being the first step. So if you could ideally put in approximately 6,000 rupees, that would fit the bill for sure for starting. In that, like I've said earlier, please identify a goal, because you don't want any paisa which you invest not heading towards any direction. So if you have a short-term goal, do not invest in equity. You could probably invest in debt funds if you have a goal below 3 years. If you have a goal which is 3 to 5 years, medium-term funds or equity funds could be you could be looking at it. Now, in that, you could probably, to start off with, you could look at investing 4,000 rupees in the equity route if you wish to take in large cap funds, and around 2,000 rupees in hybrid equity-based balanced funds. So that would form a decent component. And if you can spare around 1,000 rupees more, and if you're not even adequately covered in insurance, probably a decent health insurance and a term plan could come in handy, and at your age, you could easily do an annual premium for both of them combined. What you need, Amit, is, I would try to term it as an acronym, is patience, perseverance and focus to start off. You could term it as PPF, not the actual PPF, but you could start on these lines and you'll be on your way.
All right, so that's good advice. And since all our callers today have been new investors who have never invested before, here's another piece of information. You can also get a tax boost from the Rajiv Gandhi Equity Savings Scheme. Now remember, there are certain riders. This scheme is applicable only to investors who have never, ever invested before. Another rider is that the financial year in which you're investing, in that year, your income should not exceed 12 lakh rupees. The maximum investment allowed under this is 50,000. So that's the maximum benefit that you can get. And out of that, how you'll get the benefit is that you'll get a 50% deduction of the amount that you have invested. So if you've invested 20,000, you'll get just 50% deduction from your taxable income for that year. And this is in addition to the tax benefits under ATC. So on that note, we need to thank our guest. Gaurang, any disclosures?
Well, thank you very much, Sumira, and thank you, Lata, for having me on the show. No personal holdings, but records are a part of Plan's portfolio.
All right. Thank you very much, gentlemen, for joining in. Have a fantastic year from Lata, myself, and the entire team of Your Stocks.